Hi, Jonathan York from IRG. Looking at the global indicators that are coming through in regard to the strength of the global recovery. A lot has been made of these statistics, and if you look at them, the greatest issue is that too many of them are backward looking. You're looking at GDP growth, which is for the past 3 months. They're not really looking forward. But in the US, they have a series of statistics that come out called the leading indicators from the Conference Board. And they've shown a steady increase over the last 4 or 5 months, and have all pointed to a gradual recovery coming through in the US economy. And this appears to be backed up in the latest earnings season coming out of the US, where something like 80% of the companies have beaten the expectations of the analysts. That's been highlighted very clearly with the banks' forecasts, where most of the banks have beaten their estimates by quite a big margin. And it's interesting to see where these increased results have come from. Certainly there has been a little bit further cost cutting, but a lot of the increases have come through from increased business activity, which again indicates that people feel more comfortable about their jobs, and also as well on their loans, where the loans are not being written down as much, and in certain circumstances we've actually seen some loan write-backs. That's pretty important because during the financial crisis we've seen over the last 18-24 months, there was a great worry that a lot of these loans have just been written off completely. That has not been the case. All they've done was just written down in on the bank's balance sheet. And as we're starting to see improved economic conditions, we're starting to see these loans now written back as they increase in value. So that's pretty important, and does appear to bode all very well for the US economy. This has also been backed up as well with the increase in new home sales. Now certainly that has been predicated by the reduction and removal of some of the tax incentives. But for the month of March, new home sales were up over 26%. That's the biggest increase in 50 years. And what it does indicate as well is that there is some bank lending taking place, and again people are beginning to feel more comfortable about their job security as they're then going to the banks and applying for mortgages. So that is all positive. And should indicate that investors remain overweight in global shares, as it should be reflected in higher share prices and share values across the board. As one way of looking at accessing that, if you are still a little bit nervous about buying individual shares, there is the current Lion Tamer product out there, the Global Series 7, which does have the advantage of a capital protection to maturity. So what that means is that if the index falls below the entry value, which is 100, if you hold it to maturity, you will get all of your money back. And on the upside, any increase, you will get a one-for-one increase going forward. So that's certainly something to look forward to, and you can check out the details there on the website www.irgbop.co.nz. We look forward to speaking to you soon. Disclosure statement available on request, or you can call us 0800 867 323, or go to the website www.irgbop.co.nz. We look forward to speaking to you soon. Thank you. Bye-bye.